It is the last trading day of the month and of the quarter. And last but not least, we have Virtu Financial's Matt Cheslock to join us. Hey, Matt, welcome to the end of the week.
Yeah, it's a nice end of the week right now.
For sure. Now let's take a look here. Volume is low, end of the quarter, end of the week. We're up. Is this thin to win? I mean, is this the time to enter or get out?
You know what? It's interesting is that we talked about all the portfolio adjustments that may occur today. And if you were in the tech sector, you might have got some relative bargains. Now, you won't know for a while if they're relative bargains, but you see stocks that have really turned the tide today. You know, you see Amazon well off its lows. You see Facebook rebounding sharply. I know they're down significantly, but if you're going to rebalance a portfolio, now's a good day to do it.
Yeah, a lot of those stocks have fell through their 50-day moving average, kind of tagged their 200. But just to make something clear, Cheslock, for our viewers, the media, shame on us, headlines, they keep calling volatility the pain. The pain will continue. Is volatility really that bad?
No, not in this environment. If you look, if we can trade in a Dow range of 1,000, 1,500 points, we can do a lot of consolidating, a lot of good work, constructive work in stocks at this point. And technology may be seeing that. They may be the beneficiary of a lot of this noise that's gone on, where maybe you get out some weak investors and you get more strength in there, and then you can see the further upside as we go forward because the stocks have now consolidated. They've had that retracement.
That's cool, but at the same time, it can be kind of annoying when we have that tight range volatility like we had yesterday, for the day traders, whether they're long or short, they get stuffed out so easily.
Well, we can't start talking about having no volatility, too much volatility. I mean, last year we had 10 days all year with 1% volatility. I mean, now we have it every day. Now we're saying there's too much volatility. So, as you approach, a holiday week, a day like yesterday is needed to catch your breath and really maybe see what the market's doing. But you look at a stock like Facebook, it finally solidified yesterday. It found its base, and it's bouncing off that today. So that's what this market has been predicated on all along. We've seen their sector rotations. We've seen 2 or 3 sectors maybe fail, but other sectors have picked it up. And that's why this market really didn't see a huge downside with this tech wreck.
Well, another sector, I guess you could say a trade would be flocking to gold. If people see volatility, they want to get into that. Now, we all know that the miners usually lead gold, but we've seen that kind of roll over. It looks like it's going to. Could this be a precursor of what we're going to see in gold?
Well, gold failed again at 1350. I mean, that was an important number. It couldn't break through that. And now we've seen 3 or 4 days of down days for gold. So, it's going to be interesting to see if gold, it's going to have to hold, right above 1300 for anyone to be really excited. And the next time, if it can break through 1350, then maybe you're a buyer on that strength. So, it's a good point. But you're seeing a flight to bonds, right? That's where people are going. You see the 10-year yield's gotten smoked, and everyone forecasts that to be over 3% by now, and it's not even close. So today is a risk-on environment for stocks, but also you're seeing some money flow into 10-year bonds as well.
Well, the only gold thing I'll be looking for this weekend is a golden egg for Easter. So I hope you have a nice holiday weekend, Matt. Thanks for joining me at the end of the week. Have a good one.
Absolutely. Happy Easter.
Right on.